That's what we're going to do again. Over the next 10 years, the US dollar will lose 75% of its purchasing power, which is how we will fund the $100 trillion in off-balance sheet liabilities. I think Mr. Powell is stating the obvious. I think that Powell and the U.S. political establishment has done what they could to lower interest rates. They put a lot of pressure on the near term, and the long term has risen without them. I think what you're beginning to see is the reassertion of control by the market of credit markets, what they used to call in the Clinton administration the bond vigilantes. I think there was some risk if they lowered the long term curve that they would give a treasury auction and nobody would show. So I really think that what Mr. Powell did was acknowledge the obvious. The credit markets have understood the difference between the long-term rates and the short-term rates have been pretty dramatic, despite concerns about equity markets. Normally, when there's concerns about equity markets, uh, the real money, the big money, flees into the bond market, in particular the long bond market. But the fact that there's concerns about the equity market and the long bond market has still been sold tells you that the Fed is losing control over the interest rate. And I think Mr. Powell just simply acknowledged the obvious. Mr. Trump has not yet found it convenient to acknowledge the obvious. I do too. I saw this movie once before in my life in 1975. In 1975, the Fed probably intentionally lost control of the long yield. The interest rates on the long bond rose. There was a lot of concern about inflation. By the way, the gold price tanked. The gold
Mhm.
price fell from $200 an ounce at the beginning of 1975 to $100 an ounce at the end of 1975. But the long bond market tanked too, as did equity markets, as did home prices. When the effect of the higher interest rates went through the economy, it took no prisoners. At the end of that episode, after 10 months of discipline, the Fed lost their nerve, lowered interest rates again, printed money. Uh, the gold market went on an unbelievable romp, from a bottom of $100 an ounce to a high of $850 an ounce over 5 years. So it wouldn't surprise me, if even if there wasn't an overt policy of interest rate rises, if the Fed stopped trying to manipulate the long rate. But I think almost certainly that voter pressure and political pressure will, at some point in time during Trump's reign, cause the Fed to attempt to ease monetary policy and lower the interest rate again. That will be the signal for the gold community that the game is truly on, that
Wow.
the forces that be in the United States have decided that inflation is less of a concern than the maintenance of their political and economic power. I saw that in 1975. That's exactly what happens. That's exactly what happens. I mean, let's look at this. Look at the arithmetic. Forget the policy. Just look at the arithmetic. It all comes down to arithmetic eventually. In this country, we have $36 trillion in on-balance
Right.
sheet debt. We aren't making it smaller. We're increasing it by $2 trillion a year. This government cut that Mr. Trump talked about generated a continuing resolution to raise the debt ceiling and to run the fourth largest quarterly deficit in history. Um, but that's not the whole problem. A much bigger problem is the net present value of unfunded liabilities, entitlements. That's $100 trillion, according to the Congressional Budget Office. Each number, on balance sheet and off balance sheet deficit, increases by $2 trillion each, $4 trillion annually. Now, to put that in arithmetic context, the gross federal revenues from all sources, taxes, tariffs, fees, rents, is $5 trillion. We're increasing the on and off balance sheet deficit of the United States by $4 trillion a year, and our entire federal income is $5 trillion a year. How do you fix this? We do what we did in the decade of the 1970s. Coming into the 1970s, we fought the war on poverty, which we lost. We fought the war in Vietnam, which we lost. And what we had left over was debt. In the decade of the 1970s, we inflated away our nominal obligations. According to the Office of Management and Budget, the US dollar, in absolute terms, not relative to other currencies, but in absolute terms, lost 75% of its purchasing power. What you could buy for $250 in 1970 cost you $1,000 in 1980. And by doing that, we made the nominal servicing of our obligations possible because we didn't index taxes to inflation. That's what we're going to do again. Over the next 10 years, the US dollar will lose 75% of its purchasing power, which is how we will fund the $100 trillion in off-balance sheet liabilities. We'll make the real debt 25 trillion while honoring the nominal obligation by devaluing the dollar. I hope you ask that question to David Stockman. He's the most sober viewer of all of these that I know.
Yeah.
This math is so big for me. It's incomprehensible. I'm not a geopolitical analyst. I'm a credit analyst. I'm not ducking the question. It's just that the number is so big. We had that in the decade of the 70s. And by the way, you closed the loop. During the decade of the 70s, when the purchasing power of the US dollar declined by 75%, the gold price ran 30-fold. I'm not telling you that the gold price is going to rise 30-fold. We could talk about that. But I do believe that the gold rise will be more or less concomitant with the decline in purchasing power of the US dollar. And that's a pretty impressive number. I don't think that in real terms the gold price is going to go up at all, but I think in nominal terms that it'll maintain its purchasing power against a currency that declines 75%, just like in the decade of the 70s. I'm not talking about science fiction. I'm talking about history and arithmetic. As you know, I've graded tens of thousands of investment portfolios for free for 25 years. And I've noticed that a lot of investors make the same mistake continually. The first is that they confuse volatility with risk. There isn't an asset class that I know of that hasn't been up or down in the near term 10% for no reason whatsoever. The second is that while most investors get the strategy right, those strategies are long term, and most investors utilize short-term tactics against the long-term narrative. And that's almost a guarantee of loss. If you believe that over 5 years, the gold price is going to double or triple, but you have trauma holding gold over a long weekend, what you're doing is employing tactics that are inconsistent with your strategy. Uh, Many investors focus slavishly on the price of something as opposed to the value. I own gold because I think its rise will mirror the deterioration in the purchasing power of the US dollar over 10 years. I couldn't care less what happens next week. I am a consistent purchaser of gold because I generate capital in excess of my needs for consumption. My own interests are served by lower gold prices because I'm investing for 5 years from now and 10 years from now, and I'd like to lower my average cost of gold acquisition. While I realize that my circumstance is different from the circumstance of many of your viewers, what I want the viewers to take away is if their strategy is a 5-year strategy, their tactic can't be a 3-week or 4-week tactic. There have been times, 2009 was a time where there were other asset classes that appeared cheaper to me. Gold became liquidity for me. There were assets in 2009, particularly community bank stocks, that were so cheap that I had to sell some gold to buy them. Gold is both insurance for me and it's liquidity. If there's an asset class that is more attractive to me, I will certainly shift my portfolio allocation. But we're nowhere near that today. Tariffs are taxes, and taxes are bad. Our president, like our former presidents, are transactional. And what tariffs really are is a way to appeal to the basest part of the political instincts of his supporters, and also a way to punish his enemies and reward his friends. It is a political strategy that's spectacular. It's an economic strategy that's tragic. Tariffs are taxes, and taxes are bad.